HSBC TV18, celebrating 15 years of leadership.
Our top story tonight, the budget reiterated a GDP growth target of 8% plus, but the economy continues to struggle. Core sector growth slows in January. Coal, electricity, cement and steel industries sputter. HSBC's manufacturing PMI drops to its lowest level in 5 months, and February auto sales paint a mixed picture.
The bulls remain in high spirits. Sensex gains nearly 100 points. The Nifty nears 9,000. Mid-caps hit new records. Rating agency Fitch blows hot and cold on the budget and India's sovereign rating.
The insurance bill is stuck in Parliament, but the Department of Industrial Policy and Promotion gets cracking. The 49% FDI hike is now operational. The Lok Sabha passes the Motor Vehicles Amendment Act, paving the way for e-rickshaws.
It's the second largest deal in the e-commerce sector. Taxi aggregator Ola Cabs acquires rival taxi for Show to take Meru and Uber head-on. Ola shells out $200 million in a cash and equity deal.
In a bid to change the face of priority sector lending, RBI's panel proposes the launch of a certificate, and India joins the ranks of inflation targeting nations across the world as the government and RBI sign the new monetary policy framework, and private banks rally in trade as the budget makes more room for foreign investors.
Coal block fund by Jindal Steel, Balco and BS Ispat come under the government scanner. The coal ministry is re-examining the bids after reports point to problems with the auction process. And companies bidding in the coal and spectrum auction could come under the service tax net, but prospectively.
Already 70-80% problem already with solved.
Right.
There are difficulties.
Yes.
40 projects already terminated.
Road Transport Minister Nitin Gadkari sets the ball rolling to achieve the target of building 25 kilometers of highways every day, proposes a new PPP model with the government pitching in with 40% of equity.
We have to support that ordinance, and at the same time the spirit of implementation is very important.
NDA ally and Andhra Pradesh Chief Minister Chandrababu Naidu throws his weight behind the changes to the land acquisition ordinance, promises to cut green tape for investors in his state and provide clearances within 21 days. That's an exclusive.
And after a decade, Jagmohan Dalmia returns as the new president of the BCCI in a blow to entry. Nivasan Anurag Thakur is elected the board secretary with the backing of Sharad Pawar.
Always how much so that the target becomes fine. We will keep the expectation.
So we have not changed our December target. It continues to be at 32,500.
That bullish on the market.
Our team in India has put out effectively up to about 33,000 by year end. But I think, quite frankly, my personal view is that we can be much more ambitious regarding the equity market here in India.
This time around, there was bread and butter in the budget, but no jam.
No, I think that the budget was good, but as I thought before, that it will be difficult for the government to disappoint you too much.
I was expecting a lot more of clarity coming through on housing, on rural and urban housing.
Today, there are so many investors are coming forward, either domestic players, even international investors also are coming forward.
We have the law directly
Well, in the words of Finance Minister Arun Jaitley, India is an elephant which moves slowly but surely. Most economists and market watchers have given a thumbs up to his budget and the growth revival roadmap. But macroeconomic indicators are not pointing to a recovery just yet. Hi, Nantara.
Good evening, Shireen. So if you look at all the macroeconomic data that came out today, it's not looking good. Factories are sputtering, showing signs of a slowdown. But you know what? The equity markets are convinced that the Achhe Din are upon us.
Well, equity markets have been convinced about that for a while, but factories not so much at this point in time. But the bulls on the Lal Street, as Nantara was pointing out, continue to move stronger. Let's get down to the market action now. Another solid session on the Lal Street as markets marching towards record territory. The Sensex gained nearly 100 points in what was a pretty steady range-bound session. The Nifty gained over 50 points. The index is now within a kissing distance of the 9,000 mark, but the day belonged to the mid-caps. The mid-cap index rallying over 200 points, hitting a lifetime high in trade today. So the budget is done in and dusted, and is India primed for a sovereign rating upgrade? Fitch doesn't seem to think so. The rating agency believes the budget will have a mixed impact on India's sovereign rating. Fitch also says the loosening of fiscal consolidation in the medium term is credit negative for India, and this comes after the finance minister raised the fiscal deficit target for FY16 to 3.9% from the earlier 3.6%. Fitch says the lack of an ambitious deficit reduction plan will increase the debt burden, making it a credit weakness. However, Fitch believes that the structural reform process proposed to remove infrastructure bottlenecks is a credit positive. So that's the view they're coming in from Fitch. And remember, we spoke with Moody's last evening, and Moody's says that on the back of what they've heard in the budget, for now they continue to maintain their outlook on India. Well, the markets may be cheering the budget, but they will have to deal with a new wrinkle tomorrow. Data shows growth in India's 8 core sectors has slowed down to 1.8% from the 2.4% last month. Likewise, the HSBC manufacturing PMI shows that the economy has slowed to a 5-month low in December. Lata joins us now to put this data in perspective. Lata, it looks like the economy is actually slowing down. It's not showing signs of growth from here on.
Well, slowdown writ large, as you said very correctly. And prominent among the slowdown are sectors like coal, cement, electricity. Now, why am I picking out these? They are not the slowest growing sectors in the month of January itself, but they are so much slower than the average that they set for themselves in the April-December period. For instance, coal has grown by just 1.7% in January. April to January, it has grown by 8.1%, which means in very many months in 2014, calendar 2014, it grew by double digits. In comparison, 1.7% in January is very poor. Likewise, for cement, it's a 0.5% growth. For a better part of April to Jan, the average is 7.1%. Electricity average for April to Jan was 8.9%. In January itself, it has grown by just 2.7%. So clearly, there is slowdown writ large. The two sectors that did well in January are refinery products, which grew at 4.7%. Their average for April to Jan was just 0.1%. Likewise, fertilizers grew by 7.1%, and their average from April to Jan was just minus 0.5%. So those two sectors appear to have picked up in January. But overall, the core sector itself has grown by just 1.8% for the month of January, whereas April to Jan, it notched up an average of 4.1%, clearly showing that January is a bad month. HSBC data, which is for the month of February, incidentally, it's a more recent data that has slowed to 51.2 versus 52.9 in January. In fact, 51.2 is a 5-month low, and all the ingredients within that index are showing some bit of slowness, not 5-month lows, but they're showing slowness. The output index is below the long-term average. New orders slowed. Not many jobs were added. In fact, in some industries, headcounts fell. Prices of inputs fell, which clearly show that there isn't much demand. Only exports grew very well. Otherwise, the PMI data is also disappointing for February.
All right, Lata, not looking good there as far as the macroeconomic indicators are concerned. And staying with that theme, auto sales for February throwing up a mixed picture. The good news first, Maruti Suzuki and Tata Motors are showing signs of continued recovery. Higher sales from Zest and the Bolt took Tata Motors' sales growth to double digit. But M&M is struggling, with total sales down about 10%, and its bread and butter tractor sales down around 38%. Two-wheeler makers Bajaj Auto and Hero Motor also disappointed the street. It was a shocker from Bajaj, with sales slumping nearly 22%. Hero saw its sales dip by 4% today, so it's not looking good there, specifically as far as the two-wheeler makers are concerned. And that gives you an indication that all is not right as far as rural demand and the rural economy is concerned, Nantara.
Well, I said to Parliament, Shireen, the Lok Sabha today passed the Motor Vehicles Act Amendment Bill. That bill paves the way for e-rickshaws to ply on the roads. Not just that, the lower house also debated the changes to the Mines and Minerals Development and Regulation Act. Shireen.
And even though the insurance bill is still stuck in Parliament, the Department of Industrial Policy and Promotion has gone ahead and operationalized the 49% FDI hike. Now, this essentially means that foreign players can now invest up to 49% in Indian insurance companies. Ritu joins us now with the details. Ritu, the government seems fairly confident of passing the insurance bill, and which is why we've seen the press note actually announcing the notification of the change.
The DAPB press note which was released today is in the backdrop of the ordinance which was promulgated. The foreign investment cap, of course, has been enhanced to 49%. Between 26 and 49, one has to go through the government route, and up to 26, it is through the automatic route. In addition to that, the foreign investment cap will be a composite one, and new instruments of foreign investments have been added, which includes FVCI, NRI and depository receipts. In addition to this, a new activity has been added as far as the insurance sector is concerned, and that is insurance intermediaries, where foreign investment up to 49% will be allowed. Now, while saying that, this press note also explains that if such an insurance intermediary is a bank, then foreign investment in such an intermediary, which is actually a bank, can go up to 74%, because that is a foreign investment cap of the banking sector. But there are some certain conditions, and the condition is that in such a company, the revenues from the core business, the primary business, that has to be around 50%, and in such a case, foreign investment can go up to 74%. Now, tomorrow we understand that the government is planning to introduce a new insurance amendment bill in the Lok Sabha, and we'll have to wait and see if that happens, because Finance Minister Arun Jaitley, as of now, is not in India. With that, it's back to you.
Right, thanks a lot for joining us with that, Ritu. So the new FDI cap has been operationalized for the insurance sector. Here's the CNBC TV 18 exclusive. Just days after taking charge of the Road Transport and Highways Ministry, Nitin Gadkari had promised to deliver a rate of 25 kilometers of road construction every day. And now his ministry seems to be moving in that direction. Talking to us earlier in the day, Gadkari said road projects worth 1.4 lakh crore rupees have been cleared and 40 unviable ones have been terminated. He also proposed a new public-private partnership model to revive investments. Here's more from Nitin Gadkari.
Already 70-80% problem already has been solved.
Right.
There are difficulties.
Yes.
40 projects already terminated.
Right.
The project that cost more than 1,40,000 crores have been cleared. All problems have been solved. And the 26 projects we are facing the problem where ministry can't get succeed. To solve the problem, we are taking this all to the cabinet. And after the intervention of the cabinet, I feel that we will solve the problem.
So the cabinet will discuss how stuck projects are.
My proposal is to the cabinet. In due course of time, as earlier it will come to cabinet. Right. And after the decision of the cabinet, I feel that out of 26, 16 to 20 projects already it will be solved.
Right.
And after that, then we think about it and we will find out the solution for that.
Right.
Because it is the previous asset given by the UPA government to us.
Right.
These are the complicated issues ultimately, but we have to solve them.
And EPC is a way forward, sir? Will you continue with EPC, or do we
are changing a new model of PPP, that 40% equity from the government and 60% from the concessionaries.
Right.
And that is also a good thing where I feel that it can be good.
Big demands for change in the model concession agreement as
Already
well.
The committee appointed under the chairmanship of the cabinet secretary, and we are concerning all the stakeholders, the contractors and the bankers and everyone. And on that basis, we are preparing the new concession agreement, model agreement.
Right.
In due course of time, within a month, there will be a new model agreement by which it will solve all the problems.
That's it.
Well, that's the Road Minister Nitin Gadkari there. So did the budget live up to expectations? Joining us now is Gunit Chadha, the co-CEO Asia Pacific at Deutsche Bank, and Jim O'Neill, the former chairman of Goldman Sachs Asset Management. Gentlemen, appreciate you joining us. Gunit, let me start by asking you, you've been interacting with a plethora of stakeholders from the government to corporates and foreign investors. Summarize for us what the mood on India is now post Arun Jaitley's full budget.
The mood on India is actually very positive. There's clearly a lot of confidence which has been ignited by Mr. Modi and the entire government. As I've spent time with the various union ministers across finance and power and railways in the recent past, I walked away with two very clear messages. One is a deep intent of the government to make sure that they are pursuing a path which is around growth, around development, investment and infrastructure, and finally around jobs. And the second message I walked out with is very well synchronized alignment of the government, irrespective of who you talk to. So that augurs very well for India, and frankly, it's no surprise to me that whether you speak to the Fortune 500 CEOs in the boardrooms, or whether you speak with global portfolio investors, or frankly, even with the Indian tycoons, there is optimism which has come right back into the system.
All right, Jimoni, let me come to you. Do you think the budget has enough game-changing or nation-building ideas, as some are calling them, to ensure that we do get back to a high-growth trajectory?
I suspect it does. To be honest with you, partly because I have flown over here since late Sunday and arrived a couple of hours ago. You know, I'm still a little bit removed from having a chance to see all the detail. And I'm saying that because what is interesting about this budget, in my view, is that there is a lot of different things which could be actually really very important potentially for raising India's long-term growth rate. And in that sense, my creeping suspicion is that yes, there is quite a lot of important positives for the long-term growth trajectory for India and for people to get more optimistic. The dilemma in making me a little bit cautious in rushing to judgments is that we need to know, and I do, but everybody else does, what is the real detail and how are these things going to be implemented. So, for example, I get more and more intrigued about the statements made about the Monetary Policy Committee, and if there is going to be a sort of British-style Monetary Policy Council in which a number of independent people vote on interest rates, for example, that could be in itself a hugely important thing for India. And of course, the whole thing about the social security provision and efforts to bring in more and more people into the productive labour force through a variety of different parts of this budget, I suspect are very important positive things for the long term for India.
Okay, positive for the long term. Gunit, eventually it all boils down to higher investment into India, and on that count, the government is trying to improve the ease of doing business. Do you see higher allocation of foreign funds into India on the back of what the finance minister has articulated?
Very clearly, Shireen. I think the confidence which Mr. Modi has unleashed over the previous 9 months and leading up to the budget, I think it's been very consistent. If there's one message from the budget, is that the government has been very consistent on consolidation of its policies around growth, development and infrastructure investments. I think the government equally has been very realistic about the various fiscal maths around the budget. Most would argue that the government may not just achieve but overachieve on the budget numbers. The government has clearly been very confident. The fact that they have decentralized a lot of the tax and grants into the states reflects a very confident message from the government. And finally, the government has been reformist in terms of the various structural policy reforms which have been mentioned. So while there's certainly lots of wood to chop, global growth can be volatile, I have to say India stands out amongst not just emerging economies, but even in respect of developed economies, as a country which has absolute scale, size, and the growth ahead of it over the next 12 to 18 months. I would be surprised, I have to say, I would be surprised if in FY 16-17, a year from now, the rating agencies would not upgrade India. So I think India is poised at a very exciting moment, not just from domestic investors and domestic industrial houses, but even from foreign portfolio and strategic investors.
All right, so fund flow is likely to continue. But Jim, back to you. Let me ask you about the infrastructure side of the story. Do you believe that the government's allocation is going to be enough to bring in public investment and then crowd in private investment? Because CapEx has actually gone up just from 1.5% to 1.7%.
So I'm going to give you a possibly unhelpful answer, I'm afraid. I think it's definitely a step in the right direction. I really applaud the finance minister and his team and the government in general for being not so hung up about a deficit of 3.6% of GDP. You know, at the end of the day, whether the deficit's 3.9 or 3.6 or 4.1. It is to some extent out of the government's control because it reflects the economic cycle. And we all know they're influenced by an enormous number of domestic and international things. And I have argued for many years that India should be bolder in terms of the quality of its budgets, in terms of trying to distinguish between what's spent on investments and what's spent on what is generally called consumption. So in many ways, that is the real character identifying thing about this budget. It is a step in that direction. But given the scale of India's infrastructure needs, the scale of its education need, and actually linked to the specific purpose of my trip, the scale of its health needs, and India's potential to grow by double-digit Chinese style in the future, it would be nice to see something a bit more ambitious. But I guess if you think of the environment and the circumstances where Modi's government and his team have come from, this time a year ago, people were, in my judgment, ridiculously talking about India as being one of the so-called fragile five. And they need to be a little bit careful about some of these headline budget numbers. So I can understand why they weren't even bolder. But I think it's a step in the right direction, and I would like to see more boldness in the future.
All right, he could have done more, but this perhaps should be enough. But Gunit, you know, you've seen the Indian economy for years now. This time public spending has increased, or at least the allocation has increased, and the states have also been given higher flexibility to spend the money that they get. How much of a multiplier is that likely to be, and how long do you think it will take for the capex cycle to pick up?
So I think the government policy in using public spending as the first lever to kickstart infrastructure investments in the country is absolutely the right way forward. The choice of the sectors between railways and roads do have a very significant multiplier effect. And I would well advise that the private sector capex should follow, and which is likely to be more a second half of FY 15-16 event, no different from when I expect the earnings cycle also to come back into the markets. The key challenge here will be around making sure that financing is available for the public spending, and whether that's tapping into the domestic saving rates and channelizing them into financial assets, or whether it's attracting investments from global pools of capital, both of which are a priority with the government, as we've seen in the budget as well.
All right, Jim, I'm going to wrap this up with you. The Finance Minister has announced a 4-year roadmap to bring corporate taxes down to 25%. Whether they are able to achieve that target or not, we don't know. But this year, there's actually going to be a hike in corporate taxes because of the surcharges. About 34% now corporate tax. Is there enough in this budget to actually signal a Make in India shift?
You know, I don't know if there's enough in this budget on its own. But coming on the back of some initiatives that have taken place over the past 12 months, and as so long as Modi keeps his focus on his famous CG squared, on all about this focus about the quality of government as opposed to the quantity, I think that's really important. You know, there's this famous phrase that so many people have talked about for so long, that India would be fantastic if it weren't for its government. Maybe what is also characterizing the Modi government is about trying to make sure that things that get announced get done. You know, there's always so much focus on what gets announced, and frequently in many countries, but certainly India in the past, there's a big difference between what gets announced and what gets done. And part of India's problems with the complexity of its democracy is there's a huge gap and a hole where these things disappear. So making sure things get done, which requires attention to detail as we go through time, is a very important, albeit difficult part of what I think this government's trying to deal with. And I have to say that kind of quite impresses me. So kind of a little bit, it's an unhelpful answer in a way, because I know everybody always wants an eye-catching comment, but it's a bit difficult to judge. But the more I think about it, the more impressed I am about the way the government's approaching some of these issues and trying to make sure that the building blocks are being put in place for India to really stand on its own 2 feet more permanently and not be subject to these rather wild swings that are greatly dependent on the rest of the world. As you well know, I've often, and still do, think of India in the context of the BRICS and China. You know, and China's a country that's had its own growth rate largely being driven by things it does itself for many, many years. And I see certainly the signs of this becoming more and more the case for India, which...
Jim O'Neill and Gunit Chadha, thanks very much for joining us here on India Business Hour with your assessment of Budget 2015. On that note, it is time for us to wrap up this edition of India Business Hour. Many thanks for watching.
In the process, Moily then mounted another attack on the governor over his decision to not cut interest rates. Here's that exchange between Veerappa Moily and Arun Jaitley.
Same committee headed by RBI governor selects, I think, 6 or 7 CMDs of the bank. After due diligence, everything, and you cancel that suddenly.
The manner in which the appointments were made, the marking on basis of which candidates were rated, and each candidate who in the normal performance rating of the last few years was not praised high, as a rule got 29 out of 30 marks in the interview. And therefore, after a CBI report, the matter was referred for reconsideration to the RBI governor.
RBI governor is the chairman while selecting it, practically same members, and RBI governor and the same members, they cancel it. You should either the RBI governor should quit if he has a moral ground, or the members. I don't blame you. Even on the interest rate, I will just finish that also here. Interest rates are concerned. Now it has become mature to reduce the interest. You agree, you have given statement in number of places. Even the RBI governor agrees that, it deserves to be. Japan has done it, reduced interest. China has reduced interest. All around, everybody has done it. But, you refuse to do that. That means it is not a sensitive government. You are totally insensitive to the problems of the agriculturists, farmers, insensitive to the industry, insensitive to the manufacturing sector.
Well, on one issue, both the Congress and the BJP come together that the Reserve Bank ought to have cut interest rates. On that note, it is time for us to wrap up this edition of India Business Hour. We'll be back with the trading action tomorrow morning. Till then, from the entire team, goodbye. Thanks for watching.
CNBC TV 18, celebrating 15 years of leadership.